You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today's Monday, 24th day of June, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the trading day. We do two every trading day. Now, the first live broadcast, that is our live training room. That is reserved for members only and those who are taking their 1 week free trial. If you've never taken your 1 week free trial, go to mytradingiq.com. At the top of the page, there's a link that says 5-day free trial, no credit card required. Click the link, fill out the form, make sure you get it right, hit submit, and in most cases, same day, get your desktop set up, get your indicators indicating, and then your 5-day trial will officially begin the following day. Now, you might be thinking, well, gee, if I sign up today, Monday, and I start Tuesday, I'm only going to get 4 days. Not true. You see, it doesn't matter what day of the week or weekend or hour of the day that you sign up for the trial. You will get 5 consecutive trading days, even if it stretches over a weekend. So if you signed up today and your trial started tomorrow, you'd have the rest of this week, plus the weekend, which doesn't count against you, and there are markets that trade over the weekend, and you'd still have next Monday. So again, no matter when you sign up for the trial, once we've got you ready to go, you'll get 5 consecutive trading days, even if it stretches across a weekend. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's a couple different ways to join the afternoon broadcast live. The best way is you only have to do it once. Go to mytradingiq.com. Scroll down to where it says afternoon broadcast. Click the link, fill out the 30-second registration form, and you're done. What'll happen going forward, every trading day, you'll get an email about an hour before this broadcast starts. In that email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Now, the benefit is that gives you access to the question box, so you can ask questions and participate in the discussion. Gordon, I see your question. In Logic 247, if there is a user document, please let me know where to download. No, I don't have a document, but if you have questions about it, I'll be happy to answer for you. Probably best thing to do is book a mentoring session. Okay, where was I? Yes. Best way to join the afternoon broadcast live, I already gave you. Now, there's going to be days when you're out of the office, away from the desktop, but you still want to join live. You can. And there'll be days when you're busy, can't join live, but want to catch up later. You can do that too. Talking about our YouTube channel. It's easy to remember. youtube.com/CFRN. Gordon, PR means potential resistance. PS means potential support. Okay, where was I? Yes, there'll be days when you're busy, you can't join live, but you want to get caught up later. Days you're out of the YouTube channel. youtube.com/CFRN. You've already got the youtube.com part memorized, so really all you got to remember is CFRN. Not only do we broadcast live every trading day on our YouTube channel, we also archive each and every daily broadcast. Currently, there's over 2,500 daily episodes archived for your educational and viewing pleasure. Now, if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can scroll back 6 weeks, 6 months, 6 years, even more. Just pick some days at random. Doesn't matter which day. Watch a little bit, fast forward a little bit, watch a little bit, jump to another day, another year, watch a little bit, fast forward a little bit. You get the idea. Obviously, you're not going to watch them all. But thanks again to the power of YouTube, you can see how we've evolved over the years. youtube.com/CFRN. And this is our schedule every afternoon. Of course, we begin at 12 noon Eastern, as long as everything goes well. Then we start out with our daily devotional, word of prayer, go over some headlines, then we do a recap of the alerts. Then Michael joins us about 12:45, 12:50, does a recap of this morning's live training room. And then at the top of the hour, we go live on the TradingView platform and do some live trading for 30 minutes. And then I wrap everything up with our good word for the day. So let's get cooking. Now, on Friday, we started a new devotional topic. Who is Jesus? The one we just finished, The Air I Breathe. Man, that was awesome. If you missed it, it's out there on the YouTube channel if you want to check it out. But we're in day 2 now of Who is Jesus? Today's scripture is Luke 19, verses 1 through 10. And I'm going to share with you from the Message translation. Then Jesus entered and walked through Jericho. There was a man there, his name Zacchaeus, the head taxman and quite rich. He wanted desperately to see Jesus, but the crowd was in his way. He was a short man and couldn't see over the crowd, so he ran up ahead and climbed up in a sycamore tree so he could see Jesus when he came by. When Jesus got to the tree, he looked up and said, "Zacchaeus, hurry down." Imagine Zacchaeus is surprised that he knew his name. Anyway, back to the scripture. Today is my day to be a guest in your home. Wow. Zacchaeus scrambled out of the tree, hardly believing his good luck, delighted to take Jesus home with him. Everyone who saw the incident was indignant and grumped. What business does he have getting cozy with this crook? See, nobody liked the tax collectors. I guess some things never change. I don't know. But they're just doing their job. Zacchaeus just stood there a little stunned. He stammered apologetically, "Master, I give away half my income to the poor. And if I'm caught cheating, I pay 4 times the damages." Jesus said, "Today is salvation day in this home. Here he is, Zacchaeus, son of Abraham. For the Son of Man came to find and restore the lost." Again, that was Luke 19, verses 1 through 10. So, the topic, we'll be dealing with it for the next few days. Who is Jesus? Friend or foe? Now, we ask a big question on Friday. A second question we need to ask about Jesus is whether he is truly a friend or a foe. When people read the Bible, they often look at stories in the Old Testament of God exacting punishment on a group of people and assume that he is a vengeful and judgmental God. Or they compare him to the deities in other religions, like the Greek gods, and assume that he is just like them, petty, jealous, ill-tempered, bitter, and unstable. As you know, it can be difficult to judge what someone is like from outside appearances. When you meet someone, it is always a calculation process as you guess what he or she is like, and then test your assumptions as you get to know the person. The same can be true of Jesus. When you hear about him, you may wonder how he is going to respond to you. Is he going to greet you with a smile? Is he going to be happy to talk with you? Or will he be disappointed in you because of the mistakes of your past? Jesus answers this question for us in Luke 19. We just read, Jesus is passing through town, sees Zacchaeus up in the tree, calls him down, says, "Let's go to your house." So Zacchaeus was hated on many levels, but Jesus chose him to go to his house and have dinner. Jesus looked past what the general population thought of this man and reached out to him. He said, "Come down immediately. I must stay at your house today." In that culture, to eat at someone's house was a sign of honor, prompting people to exclaim, "He has gone to be the guest of a sinner." Jesus was often accused in a negative way of being a friend of sinners, but it was a title he seemed to embrace. Jesus said, "It's not the healthy who need a doctor, but the sick." It's Mark 2:17. It was the sinners whom he sought out while on earth, the people who recognized they needed him. He was a friend of people who didn't get friendship. He was one who reached out and touched those whom others weren't willing to touch, and their lives were changed forever. Jesus does the same today. And this is good news for us because, as Paul states, all have sinned and fallen short of the glory of God. Romans 3:23. Each of us, like sheep, have gone astray. Isaiah 53:6. We are all sinners in need of a friend like Jesus. And he is still in the business of healing the sick. He wants to be your friend, not your foe. You have met because of your friendship with Jesus. And how does Jesus want you to respond and interact with these individuals? Join me in a word of prayer, please. Hang on, I seem to be having a issue. It doesn't have anything to do with a prayer. It has to do with my computer. Why is it acting up? I want to be able to show you the charts today. Hang on. See if I can fix it. Come on now. Wow. Something has gone horribly wrong. I wonder if it's going to let me show charts. Seems like it is. Doesn't. Yeah, I'm sorry, guys. This is live radio. No, doggone it. See, that's not going to work either. For that. Oh, man. I don't even think I can log out of my platform. Well, you know what? Let me think for a minute. Let's pray. Heavenly Father, we come before you with hearts full of gratitude. The story of Zacchaeus, who reminds us of your amazing grace and mercy. Just as Jesus sought out Zacchaeus and brought salvation to his home, we thank you for seeking us and offering us the gift of redemption. Lord, help us to have the same eagerness as Zacchaeus to encounter Jesus and to open our hearts fully to him. Transform our lives with your love, and let us be instruments of your grace to those around us. Thank you for the salvation we have in Jesus, who came to seek and save the lost. It's in Jesus' name we believe and pray. And everybody said, amen. Amen, and happy Monday. All right, I'm going to give you the numbers from around the world, and I'm going to put you on hold, I guess, while I try to see what's going on with my charts. They're sitting down on my taskbar, but they won't open up. What could it be? Anyway. All right, here we go. The Dow up 358 points, almost 1%. NASDAQ down 41. S&P 500 up 17. Russell 2000 up 16, almost 1%. In the commodity basket, crude oil up 79, make that 80 cents. Trading 81.53 last, almost 1%. Gold up $10.40, trading 23.41 last. Silver up 9 cents, trading 29.52 last. In the Asian markets at the close, the Nikkei posted a gain of 208 points. Shanghai dropped 35. Hang Seng unchanged on the session. And in the European markets at the close, FTSE up 43. The DAX up 162, which is almost 1%. And the CAC up 78, which is a little over 1%. So, that gave us a mixed day in Asia. It was a green day for the UK. And it's a mixed Radio Monday here in the US of A. We've got just one of the major indices in the red, the NQ, the NASDAQ. The Dow, S&P, and the Russell are all pretty solidly in the green. We like to see the four major indices the same color. That gives us better follow through. We don't care if they're all green or all red, because with futures, you can trade in either direction at the drop of a hat if that's what the chart in front of you tells you to do. So, let me pull this down here. Shrink this here. Shrink this here. Pop this baby up. Okay, now that popped up. Ho ho, that popped up. Well, Jimmy cracked corn, and I don't care. Okay. Cool. Thank you, Lord. Okay, I said I had some news articles. Nothing to really blow your mind, but it is what it is. Now, this article was written in the wee hours of the morning. Stocks opened the week mixed, with investors looking ahead to Friday's PCE report for clues about possible Federal Reserve rate cuts. Cryptocurrencies continue to face pressure as Bitcoin extends its losses following a challenging week. Apple is confronting legal challenges as the European Commission has been alleging violations of new regulatory standards. Finally, the upcoming presidential debate on Thursday is drawing a lot of market attention. Boy, I bet the markets are going to get volatile during and following that debate, no matter how it goes. I smell volatility. You know how you can smell rain in the air long before you see the clouds? Yahoo Finance trending tickers. Oh, the big movers today, I guess, are Target, Meta, and Apple. All right. Okay. Like I said, I had no real exciting news. Now, a renewed bout of volatility gripped stocks as a plunge in Nvidia Corp raised speculation that the rally in the industry that has powered the bull market is due for a breather. I've been saying that for a while. Could it finally be here? Equities rebounded from earlier losses as several other industries outside the technology world advanced on Monday. Nvidia, which briefly earned the title of the world's most valuable company last week, extended a 3-day rout to more than 10%, losing almost $400 billion in value. The firm has become the most expensive stock in the S&P 500, with its shares trading for roughly 23 times the company's projected sales over the next 12 months. Wow. Following a tech-led stock rally, Deutsche Bank says U.S. equities are set to pause. There's a lot of good news baked into markets, and if that optimism proves unjustified, there could be downside risks. Over to Oppenheimer, looking for near-term profit taking. Should be expected. The bull market appears sustainable. So, just depends on who you ask, I guess. Oh, and you may have heard about this. Car dealerships in North America continue to wrestle with major disruptions that started last week with cyber attacks on a software company used widely in the auto retail sales sector. CDK Global, a company that provides software for thousands of auto dealers in the US and Canada, was hit by back-to-back cyber attacks Wednesday that led to an outage that has continued to impact operations. For prospective car buyers, that meant delays at dealerships or vehicle orders written up by hand. There's no immediate end in sight, with CDK saying it expects the restoration process to take several days to complete. On Monday, Group 1 Automotive, a $4 billion automotive retailer, said that it continued to use alternative processes to sell cars to its customers. So, what is and who is CDK Global? They're a major player in the auto sales industry. Based outside of Chicago, they provide software technology to dealers that helps with day-to-day operations like facilitating vehicle sales, financing, insurance, and repairs. CDK serves more than 15,000 retail locations across North America, according to the company. So what happened? CDK experienced back-to-back cyber attacks Wednesday. The company shut down all of its systems out of an abundance of caution. Now, I heard this was a ransomware issue. The incident bore all the hallmarks of a ransomware attack in which targets are asked to pay a ransom to access encrypted files. But CDK declined to comment directly, neither confirming nor denying if it had received a ransom demand. Are impacted dealerships still selling cars? Several major auto companies, including Stellantis, Ford, and BMW, confirmed to the Associated Press last week that the CDK outage had impacted some of their dealers, but that sales operations continue. Now, in a different article, I read that it was like a $10 million ransom, or maybe more, but that's not in this article, so don't quote me on that figure. In fact, this particular article, they won't even confirm or deny if it's a ransomware attack. All right, now I brought this chart up earlier than normal, but you can see what's happened. The step line crossed, okay? And once the black step line crosses blue and climbing, we then look for a pullback to the green line, which is the VBC. Stands for bull bear cross. When price crosses below the green line, we're bearish, anticipate lower prices. When price crosses above the green line, the BBC, we're bullish and anticipate higher prices. Price always reverses to the mean, and the pullback holds more often than not. This pullback held, this pullback held, this one, this one, this one, this one. This one traded through. But this pullback held, this pullback held. Now we're anticipating another pullback. Thursday night in the members only workshop, I told everyone in attendance that What I expected was, because we had the step line directly above price, when the step line gets directly above price, it becomes potential resistance. I said I would look for, on Friday, a drop at least to the 62% fib extension. And by golly, that actually happened. So now this candle, the Monday candle, started last night at 6 p.m. Eastern. So we poked above it, okay? Now, blue and climbing is also directly above price. So if price were to start rising, then you would expect resistance up here at 55.70/71. So as you can see, we had a green candle that took us up to the high of the day, but we've also touched that 62 support. So we're pushing up against resistance right here at the step line. See the green body? It's right up against the black step line. And the low of the day, just like Friday, was the 62% fib extension. So I'm not saying prices can't go higher. They look like they want to, but the daily chart is really important. Institutional traders, the ones with huge market size, in fact, huge, not market size, account size, that allows them to trade in such incredible size that they're the ones responsible for actually moving price. So no matter what you trade, whether you trade futures or stocks or crypto or Forex or ETFs, if you'll train yourself to spend 2 minutes looking at the daily chart of whatever you trade before you actually start trading, guess what? Over time, you should see your performance improve. Because when you look at the daily chart of whatever it is you trade, you're literally looking over the shoulder of the guys and women who move price. Because again, institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. And it has everything to do with account size. So, as this was coming down red earlier, I mean, we dropped from 55.33 down to 55.17. So when this was red, and you knew where it should head to, Friday's low, that would have been pretty good trading, okay? Just jump in there, find a short trade, write it down to where you expect there to be support. Well, then buyers came in and ran us up, and we spiked the step line. See that little wick up there? But now we've pulled back off the high of the day. So, all right. Logic 247. Doing things a little out of order today, but that's okay. You'll get the same information. We are in week 308 of Logic 247. Over the last 308 weeks, we've issued over 16,900 individual handcrafted alerts. And what we've averaged over the last 308 weeks, on a weekly basis, we've averaged 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Now, this recap was done at 7 a.m. Eastern this morning. Valerie will update it this afternoon and again this evening. At the time she did the recap this morning, 7 a.m. Eastern, we had issued a total of 10 alerts since the market opened last night at 6 p.m. Eastern. But we were still waiting on the outcome of 7. So we only had 3 actionable alerts. So far, nothing is stopped out. Okay? But some of these ones that were waiting have resolved themselves, And I've put out additional alerts today. So when Valerie does the recap this afternoon, this will change. But again, over 308 weeks, over 16,900 individual handcrafted alerts. We've averaged on a weekly basis 20% or less being stopped out based on market structure, not a fixed stop loss, but a stop loss determined by market structure. Okay. And again, teach that to all passport holders. And so 0% now, that will change. Last week, we finished the week at 18% stopped out, which is that 20% or less that we've enjoyed over 308 weeks. Now, 308 weeks is a very long time, but way before we had Logic 247, we had the concierge trade alerts. Now, they're a little bit different in a few different ways. With the logic alerts are designed to help you learn to read the chart, okay? What was the first thing they taught you when you started school, kindergarten, preschool? They taught you how to read. Before they can teach you science or biology or psychology or anything else, you got to be able to read the textbook, right? You got to be able to understand what the teacher's writing up on the chalkboard. Same with trading. The first thing you have to do is learn how to read the chart. And in learning how to read the chart, you learn how to know with a great degree of certainty what the next high probability move is. So with the logic alerts, you get an entry price, an initial target, and then additional targets. If they're long alerts, the additional targets will be called potential resistance, PR. If it's a short alert, then the additional targets will be called PS, potential support. Remember, you only need 2 points in the S&P, 20 points in the Dow, 10 ticks in crude, 10 ticks in gold to reach your goal for the day, okay? But the alerts are not designed for you to just trade them so you don't have to worry about learning how to trade. The alerts are designed to help you learn how to read so Michael can teach you how to trade. Follow me? Okay. Now, in the one-on-one mentoring sessions, I teach you how to use the alerts to learn how to read the chart. And I want to get you to the point where when you look at a 30-minute chart, all alerts are based on the 30-minute chart. When you look at a 30-minute chart of any market, any stock, crypto, Forex, ETF, you instinctively know what the next high probability move is. About 20% of the time, the market does not do the next high probability thing. It just doesn't. It does something completely different. And that's when you get stopped out. That's when you just go look for the next opportunity. Now, the CTAs, they're published as a static report shortly after the Globex open. So the markets opened last night at 6 p.m. Eastern. I published this report at 6:05 p.m. Eastern. The logic alerts can come out anytime around the clock, 2 a.m., 2 p.m. We have traders around the globe and futures trade around the clock. So a logic alert can come out at any time, but the CTAs come out shortly after the Globex open. It's probably closer to 6:15, 6:30 most days. And then occasionally there'll be the rare day when they don't come out till 7 or 8 o'clock. But anyway, you'll be notified in Telegram when they're published. So all of our members and trial members had these targets 5 minutes after the open. Remember that when we go to the charts. Price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. Again, the BBC is that green line you saw on my daily chart. It behaves the same no matter what time frame you put it on. Now, with the logic alerts, I look left for you to find the previous swing highs and swing lows that will become those potential support or potential resistance. Sometimes an alert might have 5 targets and then a final trade to target. If it's a long alert, the final trade to target is the weekly trading zone above. If it's a short alert, the final trade to target is the weekly trading zone below. So you learn to read the chart with the logic alerts. Then you step your game up to the CTAs. And this is where you start looking left to spot potential obstacles and learn how price behaves at a weekly trading zone. This is very important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, price is always trying to reach a zone. It's above that 30-minute BBC. It's trying to get to the zone above. If it's below the 30-minute BBC, it's trying to get to the zone below. Just resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. So again, all members and trial members had these targets for all these markets 5 minutes after the open. Now, we've already talked about the daily chart, okay? Step line has crossed. We expect a retracement back to the BBC. Now, notice the daily BBC is aligned with the 50% fib extension. This is the 24% fib retracement based off the April 19th low and the new all-time high put in on June 20th. So what do we anticipate from here? A move down. Could we get a surprise to the upside? You have to embrace all possibilities and trade what's in front of you. Okay? All right. So as I said, all alerts, logic, and CTAs are based on the 30-minute chart. So here's where we opened last night. Now, we know we got to overcome that high before we start trading, and that high before we start trading to the long target. But price drops below the BBC and falls right to the target, which was defined for us on Friday. Just ripped right through the zone. Now, these are last week zones because all the alerts that go out on Sunday night are based on last week's zones because the new zones don't come out till Monday morning at 6:15 a.m. Eastern. Once the zones are published Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. They do not change in any way whatsoever. We've published the zones since December 14th of 2009. So this December will make 15 years that we've published the zones for our members every single week. So price comes down to the short target and finds support. When the market finds support, it will go look for resistance. Price got above the BBC, and you see that high right there? It's that high from Friday. The vertical line separates today, Monday, Friday, back here's Thursday, okay? So from support, we went to resistance. Remember I said price always reverts to the mean? In our case, the mean is green. We call it the BBC. When price drops to a zone, we expect it to be support. When price drops to the BBC, we expect it to be support. When price rallies up to the BBC, we expect it to be resistance. See, resistance, 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 resistance. We overshot it a little bit there. Okay. But when price drops to the BBC, we expect support. And support will send us looking for resistance. Now, because blue and climbing had gotten directly above price, that's where we found resistance. When blue and climbing gets directly above price, that's telling you that it's probably on its way to becoming red and falling. One is bullish, the other bearish. And sure enough, price trades through I thought I'd turn that off. Let me turn it off. There we go. All right. Probably should have left it running. Oh, anyway. Support, whether it's here, will send the market looking for resistance. Resistance will send the market looking for support. When price drops to a weekly zone, we expect it to be support until proven otherwise. So this candle right here, which was 10 a.m. Eastern, 10 to 10:30, okay? See this little area right here? Once it overcame this high, then you look for this to be potential resistance. And if it had gotten through that, that would be potential resistance. But it stopped right there. On point. Resistance sends us back to support at the BBC. Support sends us back to resistance at the long target. And now we're in the process of the step line crossing blue and climbing, and we're getting another pull back to the BBC. We trade every market exactly the same. Same indicators, same strategy, same methodology, same everything. Here's where we opened last night. Consolidating right here, trapped, blue and climbing above, resistance, BBC support below. But then blue and climbing turned to red and falling, and look what happened. Bang. We dropped right to the short target. Now, there was at least 40 points down to the target. There was more than that. But you only need 20 points with the Dow to get your goal for the day. Support is now going to send the market looking for resistance. Well, we made it this far, and if we look over, we can find it. Resistance sends us to support at the BBC. BBC sends us up to the zone. We get through the zone, and if you look left, you can find your resistance. And look what's happening. The step line is crossing blue and climbing. So if you're long the Dow right now, you better take profit, because price is about to retrace back to the BBC. Now, I told you there's over 16,900 individual alerts in the Logic 247 channel. Every one is a trend trade. What does that mean? It means if price is above the BBC, I'll only put out long alerts. Now, even though I anticipate price to retrace back to the BBC. I'm not going to issue a short alert. I'm going to wait for price to get to the BBC. And if the pullback holds and we start moving higher, then I'll issue a long alert. If the pullback fails to hold and we get below the BBC, then I'll issue a short alert. Okay, so 16,900 plus alerts, every single one a trend trade. There's nothing wrong with counter trend trading, but when I'm teaching people how to trade, a trend trade has a higher probability, lower risk advantage once you master trading with the 30-minute trend. Then if you want to go counter trend trading, you're certainly welcome to do so. It's your trading business. Okay. Now there's nothing magical about the 30-minute chart other than that's the chart I decided to use a few years ago. And if it's not broke, leave it alone. All right, this is where we opened last night. 5 minutes into the life of this candle, those targets were published. We ran up to the zone, actually that high right there, which happened back last Thursday. That resistance sent us down, and we came just like a tick shy of the target. Okay, Michael's here, so we will pick up where we left off after he gives us a recap of what happened in the live training room. Then we'll go live on TradingView for 30 minutes, do some live trading. Then I'll finish the alert recap and wrap things up with our good word for the day. And how are you today?
I am pretty good. Pretty good. I've got a
Whoa,
lot of things done so far, but
you sound super loud. You know, it could be me. It could be that I've got my speakers cranked. Oh, my speakers got cranked up to my headphone got cranked up to 100. So it's not you.
okay.
Yeah, now you sound normal. I adjusted
That's
the
good, 'cause
volume on my headset. Yeah.
What else?
Yeah. Nope.
All right.
Okay, looks good.
All right, here we go. Yeah, PS means potential support. How much do I just went through all that?
Yeah, I covered it with.
Here we go. Good afternoon, everyone. Today is Monday, the 24th day of June. Wow. Can you believe it? One more week and we'll be halfway through 2024. Halfway through 2024. Unbelievable. Anyway, if you have not taken a free trial with us and you want to, go here to mytradingiq.com and click on this purple button right here. When you click on that, you're going to be brought to this registration page. On this page, all we ask for is your name, your email, and your phone number. Down at the bottom, if you have NinjaTrader, give us your machine ID. If you have TradingView, give us your login ID. Either one of those, and we will get your indicators indicating for you. Each all set up and indicating. There is no credit card required for the trial. The trial is free, and there's no credit card required for it. Okay. Okay. The spreadsheet. That's what's next. Now, on the spreadsheet, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 23rd day of June 2024. We made 69 ticks on the NQ. We lost 10. We lost 10 on the Russell. We made 11 on the YM and 4 on the ES. That put us at plus 400 even on the morning session. Today it took 75 minutes and 14 trades to get to $1,800 a contract, and I took a total of 17 trades this morning. Now, this was really 31 minutes, and I think it was like 6 trades, something like that, to get to the goal. But I had one 76-tick trade on the NQ that the strategy messed up on. It only put 1 contract. So, I mean, even if I just add the 1 contract to this, it would be up $2,480 or something like that total. But that one thing without those extra 17 contracts for those 76 ticks was a huge mistake by the strategy. And I didn't even notice it until I looked at it and I said, I got to move my stop. And then I said, oh, there's only 1 contract. Anyway, on the month now, we're at $4,482 with 1 contract over 15 trading days, averaging $298 per contract for a 2-hour trading day. On the year, we're at $44,972 over 116 trading days, averaging $387 per contract per 2-hour trading day. Now, if you were to quit trading when you get the goal for the day, and you were to add one contract per month, one little contract each month. So far this year, you'd be trading 6 contracts. Next week on Monday, hopefully, this is going to be up to 12,000 by next week on Monday. Is that right? 6 times 2. Yeah, it's going to be up to 12,000 by next week on Monday. It might not be there, guys. I don't know. It's going to be up to 12,000 by next week on Monday to be able to add another contract. This is going to be up to 36,000 by next week on Monday to be able to add another contract. So I have 4 days to get that to 36,000 and that to 12,000. So I need 2,500 bucks here over the next 4 business days, and well, I need about the same. That doesn't seem right. Something's off in there. But anyway, we should get it as long as we hit the goal for the day on each day. If we hit the goal for the day on each day to the end of the week, we'll get it. So it'll be all right. Anyway, yeah, that's all that stuff. Let's get into the actual trades. All right, on the YM today, we had a few trades. We started out on the YM with one tick. I remember right way back here toward the beginning. Well, our very first trade on the YM, we did start out. We got 1 tick. I don't see where I marked it, but we got 1 tick profit on the very first trade on the YM. Then the next trade on the YM, oh, this might be it right here. We got 1 tick, and then we had a break even, and just looked like I marked everything up on the YM this morning. Anyway, this is the way it went. We got 1 tick, and then we stopped out, and then I think we got a break even, and then we got a plus 10, and then we got another break even. I think we had 4 trades in there. Okay, we got 1 tick, we had a minus 10, put us at minus 9 altogether. Then we had a plus 20, that put us at plus 11, and then we had a break even. This was the plus 20 right here. Anyway, we ended up with plus 11 overall on the YM. Now during the break, there was 1 blue arrow right here that worked out pretty well. 1 blue arrow that's currently working out right now. I'm going to try to take if it's not too late. And there, I just took it. Okay, it hasn't gone 4 ticks into profit yet, so it's still okay to take. And I just took it. Here it is. The strategies are currently working, kind of. I just got to pay attention, better attention when it puts the actual orders on. You just need to hit 4 ticks in profit, and I'll bump the stop to break even. It hasn't hit it yet, but it's going to. It's going to. I have a good feeling. 4 ticks. It's almost there. 1 more. 1 more. There it goes. There it is. 4 ticks in profit. Stop at break even. Okay, and that was our current blue arrow on the YM. Now it looks like it's going to go down to 39,882. 39,882. Hey, that happens to be the low, the swing low. Okay, so there's a couple of reasons for it to go down there. 1 is because the Dom said it should, and 2 because it's a swing low. Right? We just got out of that break even. The next one is the Russell. 39,882. Remember that number. It's almost there already. It's almost there. It just hit it. Went right through 39,882 on the YM. Right there. 39,882. Okay. The Russell now. Let's get into the Russell. On the Russell, looking over here. Right, this morning on the Russell, we didn't have a ton of trades, just a couple. And one of them was a stop out. And I don't see that I marked that up all that well either. We had 1 break-even trade and 1 stop out on the Russell, and I don't know where the stop out was, but that's all we did on the Russell this morning. 1 break-even, 1 stop out. During the break, I don't know what happened this morning that I didn't. I think it was that one NQ trade really threw me, where I should have had 18 contracts on it. Went 76 ticks to 72 ticks or something like that, and I only had 1 instead of 18. Anyway, during the break, there was just green arrows here on the Russell. A couple of nice ones. 1 right there that had to put in a lower swing, and it did, and then it gave you another one right there. Now, I wouldn't have gotten this whole move down. I would have gotten a little piece of each one right here. Probably got 10 ticks out of each one of those moves. But it is setting up another one right now. Okay, it is setting up another one. Now, on the ES, we had just 1 trade today. Let's see if I mark that one up. Oh, that goes all the way to yesterday. So my one trade today on the ES, let me shrink this down. I want to say it was right in here. It was right here. I got 4 ticks profit on that. I'm pretty sure that's what it was right there. I got 4 ticks profit on that. There's a blue arrow there that I didn't do, and over here, it's pulling back to test the ribbon. It's about to give another trade over here. Possibly a blue arrow, possibly a green, possibly a black. I don't know. It has to get into the overbought to give any kind of an arrow, right? Or hit the ribbon, one or the other, to give any kind of an arrow, and it hasn't done either one of those yet, right? So we don't have a trade showing up there yet. We just got the one 4-tick trade there. Now the NQ, we did trade the NQ more than everything today, as it used to be the case all the time. And there we go. All right. So on the NQ, hopefully I marked things up pretty well today, but judging by everything else, I probably didn't. We started out on the NQ with a +4 somewhere, and it doesn't look like I marked that up right either. But on the NQ, we started out with a +4, and then we stopped out and it put us to -16. And then from -16, we had a +4 that put us to -12. And then we had a +8 somewhere that put us, I started marking things up here at 10:30. We had a +8 somewhere that put us to -4. Then we had a +4 that put us to 0. And then we had a +9 that put us to 9. And then during the lesson plan, we had, I think this one here was a +30 to get us to +39. And this one here was a +30 to get us to +69. So, oh, and there's more over here that I missed also. Okay, well, anyway, +69 is where I got us up to as far as my notes go. Looks like there was probably more to that, or maybe those were the last couple of trades. I don't know. +69 is what I have down. I know it was a lot more than that because it was that one huge trade that I did not mark up. So anyway, this was almost during the break. I didn't take this, but it was almost during the break. There was a nice blue arrow there. There's a blue arrow over here. This one would have stopped me out for sure. This one, you would have gotten some back. And going through a little bit more, right here would have been a break even for me. If I'd have gotten a decent fill, it would have been a break even. If not, it would have been a stop out. And that was what the morning looked like for the NQ, for the ES, for the Russell, and for the YN. All right, sorry I didn't want my charts up any better this morning. Usually I do. All right, so for anybody that's in the YouTube, let me go out there for a second to the YouTube. I have to create that meeting that I had this afternoon too. For the YouTube, I'm trying to bring it up. Here it is. Okay. All right, yeah, there it is right there. Okay, it's just catching up now. For anybody that's watching the YouTube, if you have not taken a free trial with us and you want to, then go here to mytradingiq.com. Click on the purple button right here. There's no credit card required for the trial. That is going to bring you to this registration page. On this page, all we ask for is your name, your email, and your phone number. You can give us your NinjaTrader machine ID or your TradingView login ID, either or both of those things, so that we can enable the indicator set for you so you'll be able to start trading right away. All right. Yes, do all that. All right, that's how you get access to our trial and take advantage of it. Now, we'll just start trading in here. Now, I haven't really looked at the other markets at all today. I've been all over the place, and I expect I will be all week. This is going to be an interesting week. And that YM trade that we mentioned earlier, made a nice move down, had a couple more blue arrows. Now, the first blue arrow here that didn't put in a lower swing means the second blue arrow means nothing. Okay, this green arrow right here is a valid trade here on the Russell, and I shorted it. Here it is. We want to see that my stop should be 10 ticks away. Okay, And we want to see that move. It's just make sure my stop is 10 ticks away. We want to see that move all the way down here through the prior swing low, 53.6. So it should go all the way through down there right now is what it should do. Okay, so we're risking 10 ticks to make about, what's that? Well, this would be 10, 24. All right, so we're going to throw our stop at break even right now. That should not happen. We're going to throw our stop at break even right now. And we'll be looking for this to get all the way down through the prior swing low down here. That's what you anticipate with every trade that you take. It's going to exceed the prior swing high or low. All right, that's what we're looking for in this trade right now. A minimum should be right here, 24 ticks. Okay, minimum. So now we're not risking anything to make 24 ticks. Okay, our stop is at break even. No risk on this trade at all anymore. There is a black arrow over here. Now that one's kind of close to the swing low, so I don't really like that one there on the ES. We're in a no trade zone over here on the NQ, so I don't really expect anything out of that. I'm going to lock in 1 tick on this because the YM has changed direction here without putting in a lower swing. So if the Russell's going to do the same thing, it's going to pull back up and it's going to take away all that I've gained. But this is what it should do. It should exceed the prior swing low. Okay. And if we look at this, let's take a closer look over here at the YM and see what it's actually doing. Okay. Now, I don't need to see the chart anymore on the Russell. All right. I'm going to lock in a little bit more on this. That is 18 contracts. Right. So that right there, that's 25 bucks times 18. What I wanted to look at over here was a little bit bigger picture. Now, if you back this out and see what this is actually doing right here, this little bit of a long trade that it started to give, where it got up above the BBC, is that really a long trade? Or is it just a deep pullback and a bigger move down? And that's what I think it is. It's a deep pullback and a bigger move down. See, this I think is going to go down through the prior swing low. And we're going to get everything we're looking for on that. Now, I'm going to lock in 10 ticks on this now. All right, so we're at plus 10 ticks on that. I'm not going to lose anything. I'm going to cancel that. This is my 30 tick target down here that I have on every order that I take. But right up here was the prior swing low, right? So if we minimize this and we go back to our Russell, see the prior swing low is right here, 53.6. 53.6, it's right there. So if we hit that, that'd be outstanding. We have 10 ticks locked in right now, so that is 50 times 18. Right, so that's 900 bucks right there. Now, this right here is just the swing low. It just actually hit it. It didn't fill me down there, but it just hit the swing low. It should go through that. Right, if I make this a little bit bigger, it should go through that number. This number right here. I'm on the YM. I'm on the Russell. Sorry, I'm looking at the wrong darn thing. This number right here. It didn't actually hit that number. Wow. Thank you. It didn't actually hit that number. There it is right there. 53.6 was the number. 53.76, whatever. There it is. It's going to hit it, and I'm going to lock in 5 more on this. Okay, there's 5 more. And now I'm going to make it 25 ticks total. Okay, so I have 20 ticks locked in right here. And there it is, 25 ticks total. Bang, just like that. That is what you expect. Out of every trade, you expect it's going to exceed the prior swing low or high, right? And so we got 25 ticks times 18 contracts. Here, let's do the math for you. In case you don't know, this was part of today's lesson plan. The value per tick, it's $5 a tick on the Russell, right? $5 times 25, it's 125, and I had 18 contracts on. That was $2,250 right there in that single trade, minus commission. And for me, the commission is not that much. When you trade a lot of contracts, the commission goes down considerably. In the spreadsheet over here, a lot of times people say, well, this is gross numbers. What is it after you make all those trades? These are the net numbers. Net number with an $8 commission and the net number with a $5 commission. So usually it falls somewhere in between there. I fall way below that too. but usually you fall somewhere in between there, between $5 and $8. And, you know, that's realistic numbers right there of what you get after placing all those 264 trades, right? That's not after just getting the goal for the day. That's after all 264 trades so far this month that I've done in the room. Okay, I think that's what that is. Yeah, that's what that is. It's adding all these things up right here. Okay. That's all. It's all sum of V all the way down. Okay. So now that it's done that, the YM's pulled back up and it's about to give a short. The YM's got a high of 61, so be selling 53 on that on a down close, and there that is. It just slipped me one tick. Here's the YM short. Now, what do you expect out of the YM? Right, the stop should be 10 ticks away. 10 ticks away. And what do you expect out of the YM? You expect it's going to go down below the prior swing low, right? All the way down here at 838. 838, right there. So my stop's going to break even on this. Going to break even, or it should have gone into break even. Right, that was my mistake. I should have had that in break even already. We'll get it there the next time we can. But it should go down to the prior swing low right here. Right? If I stop out on this, it's my fault. I should not have had my stop. It should have been a break even. This should be a break even trade for me right now. It's possible that the BBC is going to hold it right here and push it down, but it looks like it's probably going to pull back a little bit deeper and get me. Looks like 868 is what it wants to pull back up to. And it did get me. That was my fault. That should have been a break-even trade or even a little bit of profit. But I was busy teaching, training. My fault. 868 is what I thought it was going to get up to, right? Get up to 863 so far. Now, because this blue arrow did not put in a lower swing, this is not a valid trade right here. Right? Because the blue arrow did not put in a lower swing, you don't get another trade. Right? Every time you get a green or a blue arrow, it must continue the trend. If it does not continue the trend, then, well, you don't have a trade. You don't get a follow-up trade. Okay. All right. There's a black arrow over there on the NQ that's not too bad of a black arrow because it's really close to the ribbon and you have a long way to go to get to the swing low. All right, so there's a chance it could pull back and bounce off. Now this one over here that stopped me out that I should have had my break even on, this blue arrow that I should have had my break even on, it turned into a green arrow here. Now the green arrow doesn't mean anything because the blue arrow had to put in a lower swing. This green arrow still hasn't put in a lower swing. All right. So we have a blue arrow over there on the NQ right now that should push down. Here's that, and stop's going to break even on that. And that should go down below the prior swing low, below 802. Okay, so I'm just going to lock in a point on that. It should go below 802, which is the low of the day. It should go through that. That's 30 ticks right there. At 275 is 30 ticks.
Remember, guys, when you lock in just one tick, whether you're trading one contract or 100 contracts, that one tick will cover the cost of your commissions. So Michael just covered the cost of his commissions and then some.
I did indeed. And that would be another blue one, right? That one over here, I messed up on that. I should not have stopped out on it. I should have gotten a break even on it. It did put in a lower swing now, though, so you can't take another trade. This one did not put in a lower swing yet, so you can't take another trade. Okay. The Russell did. The black arrow doesn't have to put in a lower swing unless you actually took the black arrow trade. Then it has to put in a lower swing. Any trade that you take has to continue the trend before you take another trade in that direction. Okay. Now it's 1:15. Let me show you one more time. If you've not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for this trial. Click on that purple button and you'll be sent everything you need to get into the room in the morning, right? Sent here to this page. All we ask for is your name, email, phone number down here at the bottom. Give us your machine ID if you want to. You can give us your TradingView login ID if you want to. Either one of those, and we will.
Can you show them real quick where to click for the afternoon broadcast?
I will. All right, either one of those, and we'll be able to set up your indicators for you. Now, to get into the afternoon broadcast, which I'm broadcasting right now with, we are broadcasting right now every day to get into this session. For those of you guys that are on YouTube right now, you just go here to the noon session, go to mytradingiq.com, click on the noon session right here. There's a click here button right there. You only need to do that once. That is always free. All right, and if you're in YouTube, you have a little bit of a delay between what I say and do and you seeing it. Click here and get into that every day, and you won't have that delay anymore. Okay, that delay will go away. Right, that's how you get all that up to date, real time.
Was that button working? It almost seemed like
this button. I didn't click on it, but yeah.
Oh, you didn't click it. Oh, okay.
Yeah, no, I didn't click it. I just hovered over it.
Okay.
Because it goes to a different.
Gotcha.
Sheet.
Sorry.
So this one here.
Okay.
We don't ask. You don't have the opportunity to give us your login ID. I mean, not your login ID, but your login ID, your DT Pro. Sorry, your TradingView login ID or your NinjaTrader machine ID in here. All we ask is a couple of simple questions just to see, how you got to us and all that, and basic information. That's all. But it's free. It's always free this afternoon session. Okay. And if you'd like to show you crypto, there's a crypto thing down here. I think, this isn't the crypto one. The crypto one's further down.
Free for everybody, everywhere on planet Earth with an internet-connected device.
That is true. And it has been forever. Forever being, over a decade. The YM's got another green arrow over here. Okay. And that stop is going to break even. I'm not going to make that mistake twice. All right. The Russell's got another green arrow too. All right. So I ended up with a break even on this YM, and there's an alert. This is a green arrow short alert. So what that's telling me is that the ES right here just gave us this green arrow short. Now, if you're not paying attention to your charts, if you're working, we'll say you have a job and you have to work and you're not looking at your screens all the time, that alert can be sent to your phone. It can be sent to your screen. It can be sent. You can have it play a sound if you want to let you know that there's a trade. Like that one just did. It just popped up over there and said there's a trade. I wasn't looking at the ES, but I did. I was looking over here when that popped up. I said, okay, I need to look at the ES. And to set those alerts, all you have to do is come over here, click on alert. Now it's going to be inside the context PP. All right, that's how you set that alert. It's in the context PP. You click on that. It'll be purple arrow, green arrow, or blue arrow. Those are the kind of alerts you can have, longs and shorts. You just set that particular one was a green arrow short. You do once per bar close, so it does it at the end of the bar. And in here, you can just write in here, ES or range green arrow short. And when I hit create, it's going to stick it over here on this side, over here. You see, it's already got a green arrow short right there. Oops, it's not 4 ranges. It's just 7 range. It's already got one right here, but as I do this one, it's going to create another one. Now, this is on the ESU. The last one I did was on the ES1, right? Normally, they're the same thing, but around over time, they're not. Okay, so I think I hit create on that, and it should have created it for me. Didn't I hit create on it? Oh, I'm looking down here. Sorry, I'm looking at the log. It's up here. This was the green arrow short right here, right? I did, and here it is. Now I can have it notify over here in different ways. I have the app running on my phone, so it notifies me in the app. If I get it, it'll give me a pop-up in the app, and I can have it do pop-up on the screen. That's what just popped up over here a minute ago, pop-up on the screen. I can have it send me an email. This is going to be the email that you used when you signed up for TradingView. You can do a webhook URL, which will send it to like our Telegram channel or something like that if you want to. I haven't figured out how to do that yet. Dwayne knows how to do it, but I don't. You can have it play a sound if you want. That'll play a sound for me. It plays it in my headset, but on my other computer, it plays it on the speaker, and that drives everybody nuts apparently. Well, not everybody. John. Drives John nuts. I'm sorry. Picking on John. Okay, John and one other person. You can do this
Kind of
plain
drives
text.
me nuts. I've got to change the sound to something more
Yeah,
gentle.
well, you have yours being like this clone thing, right? You have yours being the handbell, I think. Isn't that what you have yours?
No, the handbell's okay. I've got it on something else that sounds like, you know how when a smoke alarm in your house, battery goes dead, it makes that kind of sound. Whatever I've got it set on, I got to change them.
Yeah, that's what I have it set to. That's thin. That's the default one. Here, I'll play it for you so you can hear it. I think you'll be able to hear this. Did you hear that?
I heard it, but when it's coming through my headset, it is loud.
Yeah. Well, you just had your volume all the way on too. Sorry, I was going through all that and I totally forgot about this Russell trade we had going on. I'm gonna lock in 3 ticks profit on that. It was this green arrow back here. I think it was. It doesn't look like a trade I should have taken though. Gonna lock in 5 ticks profit on that. I'm gonna get out with 5 ticks profit. All right. That was the Russell, right? Yes. All right, and the ES trade is still chugging along here. It's gone into a no trade zone here. The ES trade has. While I was doing all that.
Now that 5 ticks didn't look like much, but per contract, that's worth $50. At 10
on the Russell, it's $25. $25.
Oh, okay.
It's $5 a tick.
So at 10 contracts, it would be $250.
That would be 50.
It'd be $250.
Yeah, 250.
Yeah.
You're right.
But you don't start with 10 contracts. You start in demo until you learn the strategy. Then the blueprint will give you permission to go live.
That's right. You got to work your way up little by little, starting with 1. And you start in demo. You don't even just start in a live environment. I mean, I know people say, oh, well, what demo's not the same as a live environment. Well, no, it's not the same as a live environment. You're right about that. But it's very close.
It is so close compared to when we started.
Yeah.
I mean, it was way off, but now it's almost identical. I mean, it really is.
It's very close. But what you're going through is the mechanics of placing the trade and getting the order on in the right place, and then working through the mechanics of trailing a stop and all that stuff. It's the information is right there on the chart for you. You just have to execute, but you have to be able to execute. You have to have the mechanics down. You have to be able to fluidly grab your mouse and say, okay, this is a Russell trade right here. I'm going to put an order on the sell stop limit. I'm going to put a sell stop limit order on right there. Why? Because I know exactly where that's going to be, because these are range bars. I know where the bar is going to close, and I know that that's where it's supposed to be. But you need to go through the mechanics and get all that right. Like right there on the ES, I took this short trade right here. Normally I wouldn't have taken that because it's so close to the weekly trading zone. But I wasn't paying attention. I took it anyway, and I managed to get a little profit out of it. Over here, now this purple arrow, let me explain what a purple arrow is. Okay, a purple arrow is almost the same as a blue arrow. It's a ribbon trade for sure. It's a ribbon trade with the outer bands in favor of the trade is what it is. All right, it's almost the same as the blue arrow, except the blue arrow comes out of the overbought. In this case, the blue arrow would come out of the overbought. Now the purple arrow is going to trigger anytime it pulls back to the ribbon and the black line is in the right color and the outer bands are the right color. That's when you're going to get your purple arrow. Like this one over here did the same thing. It's in a no trade zone, but it happened right there. Over here, same thing. Now the purple arrows that I like the most, when you get a purple arrow, because they can happen in a no trade zone, I like the bands to be spread out a little bit in the ribbon. Okay, because the purple arrows can happen in a no trade zone. But I like to see the bands spread out a little bit in the ribbon. Right, so what you're getting with a purple arrow is a bounce off the ribbon, which is good by itself. It's not a deep pullback, so it doesn't lose momentum because it doesn't hit the black line. Black line's in the right color and price is not hit the black line. It's really close right there, but it didn't actually hit it. So you don't lose momentum. It's bouncing off the ribbon and the outer bands are the right color. So your long and short-term trend are both in favor of the trade. So those purple arrows are really good usually. You will get them in a no trade zone when the outer bands are flat. That's why I like to see the ribbon be a little spread out, because you can see right here the outer bands were flat while the ribbon was spread. That makes that a little bit better trade. In here, everything's spread. The outer bands are good. And in here, everything's good. You got a purple and a blue arrow there because it came out of the oversold on that one. See in here, everything was good here. This one didn't go, but this one did. But every now and then you're going to get a purple arrow like this one right here, or this series right here, where the outer bands are flat and the ribbon's kind of flat. This one went okay. The following one didn't, though. Okay. Right here, the bands are kind of crunched up, so I wouldn't want to do that one. In here, the bands are separated, so you do the first one, didn't put in a higher swing, so you skip the second one. In here, the bands are crunched up, so you want to skip that. Okay. And I know everybody says, well, which one's your favorite? And my favorite is the blue arrow. The purple arrows were really good. All right, if you add the band stuff to the purple arrow, the band criteria, then a lot of those purple arrows are going to be really good trades. Right? Not everyone, but a lot of them. And can you just do the purple arrows? Yes. You can come in here and shut everything else off and just do the purple arrows. Do this and that and that and that. And yeah, and they'll shut off all the other arrows. Okay, so all you have are purple ones. You can do that for any of the arrows, really. You can do it for the blue, the black, the green. You can have just those arrows displaying if you want to. I gotta put this all back because I don't want it to be that way. That on and that on and that on and that on. That's the purple. I mean, they're blue, green, and black all in one spot. Over on the ES, mid-trend trade sell soon. Let's go see what that looks like. Now, it's on a 4-tick range that just triggered off of, but right here, we'll see if it's got anything similar on the 7 range. It's pretty deep pullback. It doesn't look like it's going to trigger on the 4 range either. It didn't trigger on the 4 range.
And you're in a no trade zone.
Yeah, this right here is in no trade zone. It's on the 7 range. All right, so I guess we're just waiting for a minute here. Wait for something to happen. Things seem to be bouncing a little bit here. I don't know if they're gonna. I want to look at the big picture. Let me go get some big picture. Look here. Where'd that go? There it is. Big picture look. All right, I took my sidebar stuff off of this. Now I don't have the right weekly trading zones on this, but just looking at the ribbon, all that's gonna be right. All right, so the NQ on the 30-minute. This is the NQZ. That's not the right NQ. Let's roll backward to the right NQ. Here we are. All right, so on the 30-minute. The green line is down into the cycle, so it's time for it to pull back. We did have a black step line cross up above the MA1 right there where it hasn't pulled back and hit the ribbon yet. That's unusual. Almost every time that you get that cross, it goes back and hits the ribbon. Sometimes it takes a little longer to do it, but almost every time you get that cross, it'll go back and hit the ribbon. It hasn't done that yet on the NQ. Now, this is the correct Russell. And the Russell it's testing the BBC. These are last week's zones. So it's testing the BBC right here without giving you anything. And this is the ES. And these again are last week's zones. So the S is below the BBC. And the ZN, I'm not sure that's the right contract on the soybeans. And the NQ15 range is bouncing off the ribbon right here. It bounced off it back here. We had all 4 lines in a ribbon. That's a valid trade right there. As long as the bar is not. As long as the bar was blue, I had the sidebar. As long as that was a blue bar, that would be a valid trade. I took that off earlier today. Put the sidebar PD on. If that was a blue bar, that'd be a valid trade.
Take a look at where price is right now, where it's hanging up, right at the previous bullish cross.
On the NQ?
Yep, just bring your cursor down and see where the bullish cross took place over here. No, to the right.
MA1 BBC. Yeah, it's going to be over here.
MA1
and BBC.
No, keep going right.
Oh, right here. Right here.
There.
MA1
yeah.
BBC cross.
See, guys, how price kind of ground to a halt there, and now it's starting to pull back up. A bullish cross that leads to an extended move should almost always provide good support the first time price revisits the area. Same is true of a bearish cross. In fact, that high up there, if you look left, there's probably or possibly a bearish cross. Yeah.
There's a cross right here. That's it, 1829. And where's that high? That high is right there at 18. Well, it's a little above 1829, but it's right there that it got hung up. 1829. So you're right about that.
Yeah.
It's right here, right there.
Now that's on a 15-tick range. It tend on the larger time frame, the 30-minute. It's really more obvious. So.
Yes. If we go to the 30-minute, here we go. So the MA1 is this red and blue line right here, and the BBC is the other red and blue line. So this is the cross right here. But you know what? I can pass it back out to Dwayne because he's got his charts all set up to show you this, and it is time to pass it back out. And I do have another meeting coming up.
You sure? Are you sure?
Am I sure?
I wasn't trying to. No, I wasn't trying to.
No. I know. I was just saying. There's the MA1 BBC cross right there, and here's the last one right here. And so you can see right here with this MA1 BBC cross, that's where the high was right there when it pulled back up. Okay.
It's where the bearish cross was. Right, yeah, it spiked the bearish cross.
And the bullish cross right here. It hit the bullish cross right back here, exactly. And it spiked the bearish cross. You see this one right here, the MA1 BBC cross right there. That's exactly right there. And it's been crossing back and forth right in this range, right through here. The MA1 and BBC. Right through here. Quite a bit. So it's got to break out of that. See, the last time it crossed away from that, it didn't even really give a cross. It gave a bounce right up there. It's got to break away from that.
The pullback holes more often than not.
It does indeed. All right, and those charts were DT Pro charts. All right, these are trading view charts. The numbers, the positioning of the indicators are not going to be exactly the same from platform to platform. I mean, there may be big differences. If one of them is on display on bar close and one of them is intra bar, then it's going to be big differences between those indicators. I mean, or if one of them is on ES1 exclamation point and one of them is on ESU, there'll be differences between those two.
But either one will work equally as well.
That's right. Just trade what's in front of you all the time. Okay, trade what is in front of you. All right, so let me say you take a free trial. You go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. That's going to bring you to this registration page. Just fill out this form. And when you do that, we'll send you everything you need to get into the room morning. And I got to send a link out to Khalil so we can meet. And I can pass this one back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park.
Okay, recap of the morning session.
Today, it took 75 minutes and 14 trades to get to $1,800.
Good job. Way to hang in there. Great way to start the week.
It was indeed.
Okay, guys, we'll pick up where we left off. Now, for those of you that may have joined us late, I'm going to just show you real quick. The CTAs come out shortly after the Globex Open. Last night, 5 minutes after the Open, our members and all of our trial members had all of these targets. Now remember, the logic alerts, that's where I teach you how to read the chart. The CTAs is where you start reading it on your own. So, for anybody that tuned in late, ES, we hit the short target, we hit the long target, we're back to the short target. I went into a very detailed explanation earlier, so once we finish the broadcast, you can go to youtube.com/CFRN and see in here my lengthy description, but we've gone from target to target. Actually, went from target back to the target pretty much, then to the target, and then back to the target. Okay, and we covered the Dow in depth. Now, see that bearish cross I was talking about? I told you to expect a pullback to the BBC, and look what's happening. This is where I was talking about the counter trend trade. Counter trend trading is valid, but if you're just learning how to trade, if you'll learn to trade with the 30-minute trend, master that, then feel free to start counter trend trading. That's just my take. So now we want to know if the pullback's going to hold. We know it holds more often than it doesn't. So if price gets down here about 37,925, then you could trade that baby right down to the short target. Now, it could spike it, so you've got to make sure that it's actually trading below. So in other words, if this candle spiked down, you wouldn't automatically go short. You wait for the next candle, which isn't going to come for 25 minutes before you make your decision. Okay, the Russell. This is where we left off. Before Michael joined us, here we opened, ran up to the zone. These are last week's zones because all the alerts that go out Sunday night are based on last week's zones. The new zones come out at 6:15 a.m. Eastern every Monday morning. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. On tomorrow's broadcast, you'll see this week's zones because every alert I've issued today is based on the new set of zones that our members had this morning at 6:15 a.m. Eastern. Now, here's where we opened, got below the BBC. Looks like we came within a tick of touching the target, but plenty of room. You only need 2 points to get your goal for the day. Then we get above the BBC, and we run right up to the target. Resistance. Now, why did price stop there? Okay, this is Monday, this is Friday, this is Thursday. You see the bearish cross where the red line got below the green line? That happened last Thursday. But it was resistance today. A bearish cross that leads to an extended move. First time price revisits that area will almost always be good resistance, just as you're saying. This is suitable for framing. The opposite's true of a bullish cross. Okay, so right here you got a bullish cross. The blue line got above the green line. So if price were to get all the way down to here, we would expect support. And we almost did with that candle right there. So I would expect it to come down further because those are like magnets. They'll drop price. But on the Russell, step line crossed, got our pullback. We spiked it, but we're printing a green candle. Now, the step line is directly above price. That's potential resistance. Blue and climbing is directly above price. That's potential resistance. So I wouldn't even mess with that. I would wait for price to get above blue and climbing and then trade like 2064 to 2066. That would give you your 2 points for the day. Now, if this pullback ends up not holding, okay, on the way down, there's potential support there, 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 and of course there. Now, this target was determined Friday. See how that works? Okay. In Q. We opened right at a weekly zone. Blue and climbing turned to red and falling. We dropped right to the target and went all the way to the zone. When price drops to a zone, we expect support. See what happened Friday? Friday, we found support at the zone, and then we found resistance at the zone 1, 2, 3 times. Today, we dropped to the zone and again found support. Bounced to the zone and found resistance. Dropped back to the zone and consolidated for quite a while, 70% of the time. And now we're trying to move lower. Okay. As price, this green arrow pulls up to the step line in red and falling and the zone, that's like resistance times 3. So you should then look for another leg to the downside. But of course, all of our members and trial members have this week's zones on their chart. Okay. All right. Crude oil. Here's where we opened last night, and we dropped right to the target. Looks like pretty much to the tick. Yeah, I missed it by 3 ticks. Then this support sent us up to the BBC where we consolidated for hours. But red and falling turned to blue and climbing, and that's bullish. So as soon as we got this bullish cross, all you had to do was go long, and it took you right to the target. Now you see the high of that little candle right there? Look left. Bearish cross. Over and over again and again. That resistance sent us looking for support, which we found right here. That support has now sent us to resistance. Where did that resistance come from? Friday. Notice the step line is starting to cross blue and climbing. If it does, and the way it's hooked to the right, it probably will. And you notice that price is consolidating sideways. Once the step line gets on the right side of blue and climbing, look for price to drop to the BBC. Now, there's 2 reasons this should hold a support: the BBC and the zone from last week. But it might not. If so, let it drop below this low and then trade 80.70 down to 80.50. That's $200 per contract traded. Gold, here's where we opened last night. Price was trapped. Resistance overhead, support below, blue and climbing. So price dropped to support. And we got a leg and a retracement and a leg. And we consolidated at the BBC. Made a couple attempts to go lower, didn't work out. Ran up to the zone. Came back down to this same area of support. And then we went back to this zone, and you see all these wicks? That means there's selling pressure there, okay? Price gets to this level, and it gets pushed back down. Maybe this will be the time that it breaks out. If so, look for resistance at that high. And then you have 23.50 to 23.51. Go for the day. And it may keep going and hit the target. Okay. Trade every market exactly the same. Some people will say you can't do that because different markets have different personalities. I don't doubt that, but I'm not looking for a relationship, so the personality doesn't really affect me. Price flows the same across all markets and all time frames, from support to resistance, back to support, back to resistance, over and over, again and again, a never-ending cycle. So, on silver, we opened on this candle. 5 minutes into the life of this candle, the targets went out, and price dropped to and through the target. Found support over here, sent it back to the BBC, resistance, which sent it to blue and climbing, support, which sent it to resistance, and you see how it's tightening up, tightening up, tightening up. Stay away from that. See, we got a spike to the upside, a spike to the downside. This is a very challenging environment. And see how price keeps getting pushed down on silver? See, this was a green candle all the way up, and it got slapped down. Green candle all the way up, slapped down. Green candle all the way up, slapped down, all the way to the zone. And then the zone held as support. And now we're pulling up to the BBC, which we just did. We'll either overcome it and run into all this garbage up here, or the pullback will hold and let price get down into this area, like 29.33 or so. Trade that down. Okay. Euro. Here's where we opened last night. We attempted to go lower. We ran into support from Friday. Price got above the BBC, red and falling, turned to blue and climbing. Then you had the perfect stack. Price, step line, BBC. I'm sorry. Price, step line, blue and climbing, BBC. And price just rode the back all the way up to the target. And why did price stop there? Friday's bearish cross. You should expect that. If you're long this trade, you should be expecting resistance right there. And guess what? Got it. So price pulls back to blue and climbing, support, and that pushes us through that area. Okay? And then we get a leg, a retracement, a leg, a retracement, and a leg. That's how price moves, in legs. Rarely does price move in a straight line. Now these are 30-minute candles, so even though that might look like a straight line, if you go to a smaller time frame, like a 7-tick range, you'll see there was tons of up and down. The markets are fractal in nature, so a lot happens inside of a 30-minute candle. See, anyway, we hit this zone where we found resistance, which we expect. The step line crossed, we pulled back to the BBC, but we got red and falling overhead. So if we bounce off the BBC, we got to overcome that resistance before we can think about going long. If this pullback fails to hold, then about 620 is where you'd look to go short. And 550 is roughly where you would start expecting potential support. Okay. Now, just as a lot happens inside of a 30-minute candle, I want you to take a look at the ES today. The ES has gone up and down and up and down and up and down and just bounced back up off that target. You can't see all that on the daily, but on the daily, you know what's happening with the institutional traders, the deep pockets that move price. They spike the resistance at the step line, but where's price headed now? Looks to me like it's headed back to the low of the session, which was the low of Friday, which was the 62% fib extension. This is the new all-time historic high. If we were to get through that 62% extension, then right below is the 50% fib extension and the daily BBC. That's support times 2. That should kind of be like a magnet drawing price down. But we'll see. So that's the ES on the daily. And there it is on the 30-minute. If price gets below the short target, you've got a double bottom here. And this is Friday. Okay. So that 55.20 area is definitely potential support. So if you let it get below that, like the 55.16, then based on this week's zones, you might be able to trade it down to 54.98. But as always, tomorrow, I will have this week's zones on my chart, because all alerts that go out Sunday night are based on the previous week zones. The new zones come out Monday morning, 6:15 a.m. Eastern. So our members and trial members have an opportunity to get the new zones on their charts before Wall Street even wakes up for the week. And as you saw, typically you can get your goal for Monday, Sunday night. If you want to work Sunday night, if you don't want to, the good news is you don't have to. Sure trading business. So we've covered it all. The path of least resistance. Got to overcome today's low and Friday's low. Only then do you expect it. Oh, and then you've got this low from June 17th. That's potential support about 54.87.88. And if it gets through that, then there's nothing in its way all the way down to 54.69/70. And the daily BBC is at 54.65. Price always reverts to the mean. Pull back held, pull back held, pull back held, pull back held. Then we get above the BBC, get a leg, a retracement, pull back held, a leg, and a retracement. See over here how the step line crossed and price pull back. See down here how the step line crossed red and falling and price pull back to the BBC. These are the things you'll be taught when you become a passport holder. To become a member, go to mytradingiq.com. If you have questions, call 949-42-EMINI or send an email to support@cfrn.net. 9 out of 10 new traders fail simply because they don't have someone to teach them how to trade. Yes, you can buy books. Yes, you can buy courses. Yes, you can buy cherry-picked videos. And there's nothing wrong. Well, the cherry-pick video thing's a little iffy, but let's say they aren't cherry-picked. Let's just say they're totally legitimate. It's still not a replacement for a living, breathing teacher putting on, taking off trades live in real time while you trade along in demo until you qualify to go live, and you asking every question that pops into your head. And because our strategy is so simple, after about 2 weeks, you'll probably run out of questions. Or you'll go to ask a question, or you'll ask a question and you'll go, oh, wait a minute, I already know the answer to that. And Michael will give you the exact same answer he gave you the last time you asked that question. We're so boring. It's wonderful. If you need an adrenaline rush, go do one of those things where you jump out of an airplane and learn how to skydive. If you need an adrenaline rush, your trading is not where you go to get your excitement. It's where you go to earn a living. Okay? Big difference. Now, becoming a passport holder does not guarantee you're going to become the 1 out of 10. But it does mean you've got a fighting chance. These guys have no chance because they don't have anybody to teach them how. It doesn't matter what career path you choose. Banker, attorney, pilot, barista, electrician, plumber, truck driver. Somebody has to teach you how to do the job before somebody's going to pay you to do the job. So you need somebody to teach you how to trade before you can expect to earn money as a trader. As a passport holder, not only do you have 2 hours of live training every trading day, you have access to one-on-one private mentoring, the strategy you learn, the indicators you own as a passport holder are fluid across all markets, all time frames. Price flows the same across futures, stocks, crypto, Forex, ETF. From support to resistance, back to support, back to resistance, over and over again and again. It is a never-ending cycle. As a passport holder, you'll also receive the Logic 247 alerts, the concierge trade alerts, the weekly trading zones. You'll be able to attend the members night. Plus, you'll get the golden key that opens all the private channels in Telegram, which means if you're not able to show up on a Thursday night for the live workshop, members only, we have a private channel in Telegram that has years of members only workshops. So you can always go back and watch it later. It truly is everything a trader needs, all under one roof, one low price. mytradingiq.com. Let's wrap this up with our good word for the day. Now, on Friday, we talked about how Jesus dealt with sin. Today, we'll talk about using your gift. 1 Peter 4:10 says, God has given each of you a gift from his great variety. Use them well to serve one another. Do you have the gift of speaking? Then speak as though God himself were speaking through you. Do you have the gift of helping others? Do it with all the strength and energy that God supplies. Then everything you do will bring glory to God. 1 Peter chapter 4, verses 10 and 11. You may not be fortunate enough to work at a job that utilizes your gifts, but you should at least be moving in that direction. Paul worked as a tent maker to finance his calling as a preacher. So if you know you're a creative person with an aptitude for design and visual arts, and you're currently exasperated by your accounting job, it may be time to reconsider your career goals. If you love to solve problems when your computer crashes, but you're currently working as a pastry chef, it's time to step back and reassess. You may not be able to make a living at your foremost passion right away, so you're working in an unrelated field. That's okay for now, but your sights must stay set on following God's calling. Moses spent 2/3 of his life getting ready for his real assignment, which was leading the children of Israel into the promised land. God never wastes an experience. Often the wisdom you glean from a job you don't want equips you to succeed in the one you do, the one God has chosen for you. So keep growing and keep believing God. Then when he opens the door, you'll be ready to walk through it. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.